Hello and welcome. This is an emergency update to summarize what's going on the financial and political battlefields. I want to give you a quick recon flyover of the kill zone so you can quickly evaluate the status and results of the events currently taking place, and then take proper measures. You need to avoid being listed among the collateral damage. This is going to hit hundreds of millions of people who are caught unaware. Are you with me? You're watching this video, so you won't be one of those caught unaware. So pay close attention for your own sake. Now, I'm not a fearmonger, and as I always do, I don't leave you fretting over bad news. So if you stick with me just a bit, I'll show you what I'm doing for myself, and from that, I hope to provide you with some strategies you can use to protect yourself. Possibly even profit, as those around you are being damaged and destroyed financially by the millions. So let's dive in. Unless you live in a cave or a jungle hut with no internet, you know that Trump is in a trade war with China. You should also know that Trump just slapped China with more tariffs on over $300 billion in consumer goods, which makes Chinese goods more expensive to the consumer. Rather than going tit for tat, China devalued its currency, making its exports cheaper to the rest of the world. In return, Trump's U.S. Treasury declares China as a currency manipulator. This puts China at odds with U.S. trade and financial policy, and the trade war, which was limited to tariff negotiations, now devolves into a currency war, which takes it to the next level. What is a currency war? From Wikipedia, they tell us it's also known as a competitive devaluation. It's a condition in international affairs where countries seek to gain a trade advantage over other countries by causing the exchange rate of their currency to fall in relation to other currencies. If this sparks a reaction worldwide, then what we see is a race to the bottom for currency valuations. So then if the currency isn't worth much, things such as in imports get more expensive for the consumer as our buying power shrinks even more. So while that's going on, Russia is dumping U.S. debt. China is dumping U.S. debt. And the funding for the U.S. deficits becomes questionable, not to mention the fact that the demand for the U.S. dollar diminishes, and when demand goes down, so does the value. Now we've been hearing about quantitative easing for a number of years. You've certainly heard that term used before. That's the Fed pumping dollars into the economy as fast as they can. This props up the government, and it also props up the stock market. That's why the economy during the Obama years was so dismal. The stock market was still doing great because the Fed was pumping money into the economy and buying U.S. debt. But now that the demand for dollars is diminishing, the market is awash in excess dollars, and they must be sucked out of the economy. This is quantitative tightening, which is the opposite of quantitative easing. When you suck money out of the economy, things slow down, credit tightens, demand for fewer dollars forces the price or the cost to go up again, and we start a new cycle of inflation. Unless, of course, they miscalculate and tighten too much, it depresses the economy and then causes deflation. So, needless to say, it's quite a mess, and the markets are starting to panic. So then, with two of the biggest buyers of U.S. debt not playing ball anymore, who will buy the U.S. debt? Who will be the big players? This funds the government and its ridiculous deficits. Who will do that? Why, the Fed, of course, the Federal Reserve. The Federal Reserve Bank now whips up more fake money to buy more fake debt. I call it fake because everyone knows it will never be paid back. So then what? Well, we can look at what happened in Greece just a few years back when they defaulted on debt to the IMF and the ECB, the European Central Bank. The banks came in and said, hey, since you can't pay with money, we'll take your hydroelectric plants, mines, ports and docks, cash-generating tourist meccas, and we now own your country. It's a total conquest. In the old days, countries were taken over only after you killed about half the population in war. Today, countries are taken over by the banks, debt, and crooked finance. It's the new weapon of choice. So let's now segue to the bond markets. Did you know that the 10-year treasuries are being bought at negative coupons? That means you don't earn interest on your money. When the coupon comes due, you pay for the privilege of the government holding your money. When the bond matures, you get back less than what you gave. This is how crazy the world of institutional finance has become. So how do pension fund managers explain that idea to one of their retirees or pension participants? It might go something like this. So, dear pensioner, we're going to invest your pension money and put millions of the pension fund into a shrinking investment. So you'll get back less than what you paid in. But don't worry, it's in safe hands with the government. That's pretty much what's going on. Ridiculous as it is. All right, so we've gone now from the sublime to the ridiculous, but hold on, it gets worse. You've been hearing for several years now that the dollar is going to collapse, right? You've heard Peter Schiff, Jim Rogers, Jim Rickards, and many, many others singing the same song for quite some time. So let's ask the question again. When will the dollar collapse? Well, it says here, a dollar collapse is when the value of the U.S. dollar plummets. Anyone who holds dollar-denominated assets will sell them at any cost to get whatever they can out of it. That includes foreign governments who own U.S. treasuries. Oops. It also affects foreign exchange futures traders. Last but not least are individual investors. When the crash occurs, these parties will demand assets denominated in anything other than dollars. The collapse of the dollar means that everyone is trying to sell their dollar-denominated assets and no one wants to buy them. This will drive the value of the dollar down to near zero. It makes hyperinflation look like a day in the park. Hello, Venezuela. So, keep those points in mind and let's just see what the general market sentiment is. Here's the S&P 500, Standard & Poor's 500 largest companies on the stock market in America. Just the other day, what's this chart telling us? Does it look like people are excited about the economy and pumping money into stocks? Quite the opposite. People are bailing out. They're saying, give me my money. I'm going into a safe haven. And they can't get it out fast enough. That drop is almost straight down. Now, here's the Swiss franc against the US dollar. Swiss franc has always been stable. This chart shows how the Swiss franc is performing against the US dollar. You want to see how the dollar is doing? Just turn the chart upside down. And that'll give you an idea. All right? That's the Swiss franc. Here's the euro. Euro against the US dollar. Again, flip it over for a graphic illustration to see how the dollar is doing. And here's gold. Just to give you a few examples here. So as you can see, it's not that these currencies or commodities are actually going up in value. It's quite the opposite. It's the fact that the dollar is collapsing. It's going down in value. People are wanting to get out of the dollar into anything else that's not dollar denominated. Okay? Now, in view of the above, the central banks know what's going on. They can see the train wreck coming just up ahead. So what are they doing? Well, for years, they've been buying gold by the ton and building their stockpiles. They have not purchased so much gold as they are this year in over 60 years. And 60 years ago, that was back when the dollar was on the gold standard. We're not on the gold standard anymore. So gold backing is not required. So why then all the buying? Well, it should be pretty obvious, right? And here's something to make a note of. The 20-year Gold Sales Coordination Agreement, as they call it, is being ditched now. What does that mean? Gold Sales Coordination. To me, that sounds like a slick term used to deceive people when it really should say gold price fixing. It amounts to the same thing. They've been fixing the prices, keeping the price of gold artificially low for a long, long time. So isn't that interesting? Central banks and national treasuries have been stockpiling for several years, and now that they have their stockpiles accumulated at prices which have been kept artificially low, they discontinue their 20-year-old price fixing agreement, and we can see the results starting to take effect already. Again, the gold chart we saw just a minute ago. Wow, what a coincidence, huh? It's amazing. So in view of all this high finance, what does a little guy do to protect himself? Where do we invest to be safe from all this turbulence and financial destruction going on all around us? It's quite easy, really. I've been talking about alternative investments now for quite some time. And I'm talking about gold, silver, cryptocurrencies, new technologies, other leading edge ideas and industries which are just starting to bloom. You know, basically, again, anything that's not denominated in a fiat currency. Paper money, get rid of it. Fiat denominated paper assets, I would get rid of it all. Now, in the links below, you'll be led to a video I did on an investment club I'm involved with, which focuses on alternative investments. Being a member of that club means you don't need a lot of capital to create a safe and diversified portfolio. It's the power of the club, the synergy of the different members coming together where we can accomplish that as a group. You can participate with the club if you so choose. That's one option. Maybe you just want to buy gold on your own, like the central bankers, and build up your own stockpile. But you can't afford to buy it by the ton. Well, don't worry. I'll give you a link below to a company I'm involved in which allows you to buy it by the gram. We're talking $50 at a time. I know people that are building their own personal gold stash 1, 2, 3 grams at a time. Every month they get paid, they have a little bit extra, they buy a little bit of gold, stick it in the drawer. I also know people who have invested with the same company $25,000, $50,000, even $100,000 in some of the opportunities and products that they have. This is a serious business. The company's called Karatbars. Many of you are familiar. There's much more that meets the eye with Karatbars. I'll leave a link below with some videos, some information. You can do some due diligence on them, but they offer much more than just gold. So you need to take a look at that. So what I recommend you do is take the time this week to fully explore the links I'm giving you below in the description box. Review the analysis, review the options, figure out what makes sense to you. And if it fits, follow the links. Take advantage of those opportunities I've provided for you below. Everything I've shared is something I'm involved with myself. I'm vested in it myself. But you choose what's right for you. You might learn something and take that a different direction, and that's great. I know this is going to be a lifesaver for some people. May God bless you and your family today and in the days to come. Take care. We'll talk soon.